It's funny. When I think back to when I first started trading, felt like all the really like serious trading, the stuff that involved algorithms and computers and, really moving the needle, it felt like that was just for the institutions,
Oh yeah,
like a
yeah,
Wall Street kind of thing, right?
definitely a different world. Yeah,
Yeah. And as an individual trader, you're sitting there just kind of like hoping to catch, the next big wave or whatever, and constantly watching the charts and hoping you made the right call.
yep,
And things are changing now, right? Like I feel like that whole landscape is shifting. And what we want to talk about today is how even if you're a brand new trader, how you can adopt a more systematic approach to trading. And that means aiming for consistent income without having to stare at charts all day long.
right.
And we're going to focus on that in terms of our weekly premium service here at advancedautotrades.com. So we've been doing this for a while with options trading, and we want to kind of give you a clear picture of what this service is all about, particularly if you're just starting out and, looking for a more structured way to trade.
Yeah, it's really interesting to see how trading has evolved. Because like you said before, it used to be this thing that only institutions had access to. These strategies and tools and whatnot.
Right.
And now it's becoming more and more accessible to retail traders, to the average person.
Yeah.
And so the main idea behind our weekly premium service is really pretty straightforward. It's let's approach trading the way that institutions do, the way that market makers do.
Right.
And if you think about it, you hear all these stories about traders who get caught up in the high, they buy high on news and then they watch those gains disappear.
Oh, yeah.
But institutions, they tend to take a much more calculated approach, a much more systematic approach.
Right.
They're focused on repeatable methods for generating income, no matter what the market's doing, whether it's up, down, or sideways.
Yeah, and that's exactly what we're talking about with weekly premium is that consistency, right? So
Right.
the goal is consistent weekly income. And to achieve that, we zero in on SPX weekly options.
Okay.
And we aim for about a 5% weekly ROI or return on investment.
Got it.
Now, I know a lot of people out there, they want to trade, but they don't want to feel like they're constantly trading.
Sure.
And this is what's really interesting about this is that this typically involves only about 4 trades per month.
Wow.
So it's not about, chasing every single move in the market.
Yeah, that makes sense.
And importantly, this strategy is designed to work in a variety of market conditions.
Okay.
So whether things are, going up, down, or sideways.
So tell me about the strategy itself. What is it that makes this work?
Yeah, so the core of this is what we call the SPX Iron Condor.
Okay.
Now, if you're new to options trading, I know that can sound a little
Right,
intimidating.
for sure.
But really, at its heart, an iron condor is a way to profit when the price of an asset stays within a certain range.
Okay.
In this case, we're talking about the S&P 500 index, or the SPX.
Got it.
And it also benefits from something called theta decay. So think of it this way, like an option contract is kind of like a perishable good.
Okay.
Its value tends to decrease as it gets closer to its expiration date,
Makes sense.
particularly if the underlying price hasn't moved much.
Okay.
And we aim to capitalize on that time decay.
I gotcha.
Now we use options that expire pretty quickly,
Okay.
typically within 2 to 3 days.
Wow, that's short.
Yeah, and that short time frame allows us to really, take advantage of that theta decay.
Interesting.
Now, weekly premium, it has auto in the name.
Right.
And we do offer automated trading, but it's important to know that if you're the type of person who wants to be a little bit more hands-on, you can absolutely use our signals to trade manually.
Okay.
So you're in control.
Gotcha.
And this is where it gets really interesting for traders who, have maybe a bit more experience or comfortable taking on a little more risk. If you trade manually and you're willing to hold your positions a little bit longer, you can potentially see even higher returns,
Okay.
maybe in the 7.5% to 10% per week range.
Wow. So there's really flexibility built into this.
Absolutely. That's a key aspect of the service.
So walk me through a typical trade. Like, when are you entering these trades and how are you managing them?
Sure. So when we're looking at entering trades, we typically aim for Wednesdays onwards.
Okay.
So we found that by that point in the week, a lot of the major news events have already occurred.
Right.
And that gives us a slightly clearer picture of where the market might be headed, at least in the short term.
Yeah, that makes sense.
Now, when it comes to actually entering a trade, we might jump right into the full iron condor setup.
Okay.
But we might also use what we call a leg-in approach. And this is kind of like testing the waters a little bit.
Gotcha.
So we might start with a directional bet, like a bear put spread if we think the market might decline slightly, or a bear call spread if we think it's going to stay below a certain level.
Right.
And those are basically simpler strategies that give us a directional bias.
Okay, so you're not always necessarily going in with that full mutual iron condor.
Exactly
You're
right.
kind of feeling it out a bit.
Exactly. And this is where the management of the trade comes in, right?
Yeah,
You
yeah.
have to adapt to what the market's actually doing.
Sure.
So if that initial directional trade or that first leg starts to perform well and is moving in the direction we anticipated, we might just hold on to that and aim for our 5% profit target.
Okay.
But if the market kind of throws us a curveball, and moves in a different direction than we initially expected, we have the ability to then complete the iron condor.
Okay.
And what that does is it basically creates a more balanced or neutral position,
Got it.
which can help to manage the risk when the market's being a little unpredictable.
That's really interesting.
And then when it's time to actually exit a trade, there are really three main scenarios.
Okay.
Ideally, of course, the trade hits our profit target,
Right.
and we lock in those gains and we're out.
Makes sense.
But the market doesn't always cooperate.
Sure.
So we also have very clear rules for when to exit if a trade reaches our break-even point or if we need to minimize a small loss.
Okay.
And sometimes if a trade isn't performing exactly as planned, but we still think it has potential, we might actually make adjustments to the position to try and improve the overall outcome.
So you're not just setting it and forgetting it. You're actually actively managing these trades.
Yeah, exactly.
Now, I know a lot of people, especially when they're new to options trading, they get a little bit concerned about the risk.
Yeah, absolutely.
Is this risky? How do we manage that?
Yeah, and that's something that we've really focused on building into weekly premium
Okay.
is sophisticated risk management. And so we do that through the adjustments that we were just talking about.
Okay.
And those adjustments are based on both technical analysis.
So you're looking at charts and indicators.
Exactly.
Okay.
But we're also looking at how the prices of the options themselves are behaving.
Interesting.
And that helps us make these informed decisions.
Now, what about capital allocation? So how do people figure out, how much money to put into these trades?
We use a unit size allocation, and we lay out all the details of that within our platform.
Got it.
So it's all very clear and easy to understand.
So give me an example. Like, let's say somebody has a $10,000 account. How would that work?
Sure. So with a $10,000 account, that would typically be a quantity 2 allocation.
Okay.
And in a typical trade, that might involve entering into 8 SPX option contracts.
Got it.
And let's say, for example, our profit target for each contract is $0.60.
Okay.
So if we reach that target, you would calculate your profit by taking that $0.60 per contract, multiplying it by 8 contracts, and then multiplying that by the options multiplier, which is typically 100.
Okay.
And that would result in a profit of $480.
So on a $10,000 account,
That's a 4.8% return on that allocated capital.
which is pretty close to that weekly goal.
Exactly. And that just illustrates, the potential for those consistent weekly gains that we're aiming for.
Now, you mentioned SPX weekly options. Why those specifically?
Yeah, so there are a few really good reasons why we choose SPX weekly options. First of all, SPX weekly options tend to have higher premiums compared to options that expire further out in time,
Okay.
or even compared to options on individual stocks.
Interesting.
Secondly, because they expire so quickly in just 2 to 3 days, it means that we have faster trading cycles,
Gotcha.
which allows for quicker risk management.
Right. If things start going against you, you're not stuck in that trade for weeks on end.
Exactly. You're in and out very quickly.
And what was that third reason?
The third reason is that the market for SPX options is super liquid.
Okay.
And that means it's generally very easy to buy and sell these contracts without experiencing significant slippage.
So you're not really worried about getting bad fills when you're trying to enter or exit a trade.
Right, exactly.
Now, how can people see, how this strategy actually performs?
Yeah, so we actually make our auto trading live results publicly available,
Oh, wow.
and we update them every week.
Okay.
So you can actually go and see how accounts using our automated system have performed over the past few years.
That's pretty transparent.
Yeah, we have data going back to 2022, 2023, 2024.
Wow.
And we even have a link where you can view the results for 2025 so far.
That's great.
And these are actual trades taken by our auto trader clients.
Okay.
And as we mentioned before, if you decide to trade manually using the signals that we provide, you can expect to see very similar outcomes.
Got it.
So, it's not just us saying this is how it works. You can actually go and see the proof.
That's awesome.
And, it's not just about the numbers either. We've gotten some really great feedback from traders who have been using the weekly premium service.
Oh, yeah. What are some of the things that people are saying?
So we've heard from folks like Mark in Florida who actually preferred to trade manually.
Okay.
But he found that his pointing was just so much better using our SPX weekly option alerts and that iron condor strategy.
Interesting.
And then there's Sarah from California who talked about how focusing on fewer high probability trades really helped her to see more consistent results.
Okay.
And we even had someone like David in Texas who was initially very skeptical.
Sure.
But he was really impressed with how the leg-in approach to the iron condor and that built-in risk management that we talked about, how that really transformed his trading.
Wow.
From something that felt more like gambling to a more reliable source of profits.
So he felt like he was actually in control.
Exactly.
That's really cool.
Yeah.
So to wrap things up, what are the key benefits that you want people to take away from this?
Yeah, so the main things to remember are that with weekly premium, you're basically getting access to a type of trading strategy that's typically used by hedge funds.
Okay.
That's not normally available to the average retail trader.
Got it.
You can potentially profit whether the market is going up, down, or staying relatively flat.
Right.
We're leveraging that power of theta decay with those short-dated options.
Okay.
You have the choice to trade manually if that's your preference.
Got it.
And if you're comfortable holding those positions a little longer, you can potentially see even higher returns.
Okay.
You can also typically avoid those issues of getting bad fills or slippage when you enter and exit trades by using limit orders.
And of course, you've got those built-in trade adjustments to manage the risk.
Exactly.
So if somebody's listening to this and they think, this sounds interesting, this might be a good fit for me, how do they learn more?
Yeah, so we're offering a 14-day free trial.
Okay.
So it's a great way to experience the weekly premium service firsthand without any financial commitment.
Awesome.
You can cancel anytime during those 14 days, no questions asked.
Perfect.
And if you're interested, but maybe not quite ready to jump in and start trading right away,
Sure.
you can still go ahead and claim your 30-day trial now.
Okay.
And then just reach out to our support team and they'll make sure it's reserved for you.
Okay.
Until you're ready to get your trading setup going.
So you don't have to miss out on that.
Exactly.
It's really interesting to think about how adopting a more systematic approach, the kind of approach that institutions use, how that could change your trading.
Yeah, absolutely.
Instead of always feeling like they have to chase the next hot stock or react to every single news headline. But if you could just focus on a small number of really high probability trades each month.
Right.
Maybe understanding how those professionals manage risk and generate consistent income is that missing piece that you've been looking for.
Could be food for thought for sure.
Definitely something to think about. If you enjoy this episode and want to stay ahead with fresh insights every other day, don't forget to hit that subscribe button or follow our podcast. We've got more exciting content coming your way, and we can't wait to have you back. See you soon.